Hey guys, Mike here. So good to be back. Looks like I missed the fireworks on Friday, but I had a good time. So I appreciate all your well wishes and stuff while I was taking my last little short trip for the summer. Hope you did the same this weekend. But this week's gonna be fun because the mega boys are out of the way, and now we got all the high flyers. The really popular stocks are reporting this week, and there are some massive moves that are expected this week. So I'll show those to you right up front. But again, we had a VIX event, you can say a couple of them, right? With obviously that was the tariff day, and then of course you had, I guess, the job numbers come out and the revisions, and then the person got fired and all that fun stuff. So a lot of drama in that one, but that's what happens, and we'll look at them. That's what happens when I kept showing you the VIX and all the stuff, and it's way down there and it's super low, and it can happen just like that going into August. I mean, remember, they're going to use any excuse to move the market down or such what? A huge run up. All right, some of you saw they were at nosebleeds moving up like, NASCAR or something, how fast they moved up. So again, we'll go into a bunch of different charts, especially on the SPX and the futures, and what I'm looking to happen and stuff as well. Feel free to put in the comments what you think is going to happen coming out the rest of this week. But this chart right here, I always say it, teach it to your children if you have them, teach it to your family. There's August, September. You can go all the way back to the 50s, the 20 years ago, 10 years ago, post-election. Like August, September are roller coasters, okay? You don't want to be out of the market in July, that's for sure, and you sure as heck don't want to be in the market in November, a lot of times. It's all about risk reward, what percentages is going to lead to this. But I don't know about you, but I'd sure as heck rather pick up shares of some stocks I love at lower prices and be able to ride them up and get a bigger gain in October, November. I mean, wouldn't that be nice? I know a lot of people would rather pay like 183 for AMD versus, like, I don't know, let's say if it gets into 160 or something. Wouldn't that be nice? 150 is even better. 140 is even better, but we'll see, okay? Looking at earnings, I mean, there's just a boatload this week, okay? It's like the last real week of earnings where you're going to get a lot of earnings happening here, especially on the popular stuff. So, you look at Monday, we're going to go with hardly anybody good, Wayfair, on semis, smaller one, maybe Tyson down there, and then we start to have fun. In the afternoon, Palantir, Hims and Hers, Mercado Libre. Tuesday, Pfizer, Caterpillar, BP, Duke Energy, Lemonade, DuPont. And then Marriott down below. We'll see how we're traveling and stuff like that. I know where I was at, it was packed out. Tuesday night, here we go. AMD, Supermicron, Arista, Open Door, Snap, Lucid, Upstart, Rivian, and Clover. And oh boy, those some high flyers, and they expect some gigantic moves in those. Then you're going to have a Wednesday, Uber, Shopify. Shopify was quietly moving up. Oscar, that's health insurance. Walt Disney. And then at the bottom, McDonald's down there. And then in the afternoon, we're going to end up with App11, IONQ, Duolingo, Fortinet, Elf, DraftKings. And then on Thursday, we'll have Celsius, Eli Lilly, ConocoPhillips, Hut 8, Sony at the bottom down there. And then in the afternoon, Trade Desk, Rocket Labs, SoundHound, NewScale, Square or Block, I still call it Square, Pinterest, and then Twilio down there in the bottom. And then, of course, on Friday, Fubo, Wendy, and a few others you can see right there. And then when you look at some of the larger moves, oh boy, almost a 16% move for Snap, 13 to 14 for Lucid, 12 for Palantir and SMCI right there, and Shopify. Trade Desk over there on Thursday with about 13 to 14%. AMD about 9 or 10% right there. And these are plus or minuses, okay? So you can go either way. You can see Uber expecting a nice move, Airbnb, Dash. And so load up for that right there. And then, of course, we're looking, we talked about this, right? The VIX, sitting there like 14. It is pretty quick, right? I mean, when it's going to pop, it's going to pop, all right? And so with those tariffs, with, this job data drama, all that fun stuff, the market loved it. You saw the same thing, not as big as a move, and that's important to note, was on move, right? So the volatility for the bond market was nowhere near what you saw for the stock market, okay? So everything's still good there now, and we did go a little bit lower. Like I said, you can go a little bit lower below that level, but watch, see if it holds. And I'm just seeing if it breaks above that trend line right there. That's all I want to see. Because remember, pullbacks are normal. It's just when you got the bond market, if this volatility starts going really high, starts really spiking, that's a whole different ballgame. That's going to lead to something bigger, okay? So you got to watch them both in context. Now, we talked about the 5-day. We talked about the 20-day. It's what we were looking for on a lot of the stocks. And so now you have a decline of 5-day moving average. We've broken below the 20. The one thing that's interesting though, you see these equal lows right here. I mean, these things are begging to be taken out. Now, does that mean it's going to happen tomorrow, even this week for that matter? Maybe not, but it's definitely something I'm keeping my eye on because it's a great target, and the market loves to take those out and then all of a sudden resume higher, but at least it's a liquidity grab. Whether it's temporary or not, we'll find out. And so now we have this big gap above. As you can see, we actually have hit a discount. As you can see, we moved up to that swing low right there. We're there, okay? So we'll see if they're going to take those out first, or do we start to pop back up, maybe fill some of that gap, maybe mitigate some. But on the larger time frame, looking out over the next 2 months, that box right there would be perfect because that would be a 3 to 5% move down, 50 moving average retest, weekly fair value gap, and you got the previous all-time highs in this area as well. So that would just be, as far as confluence, a great bounce point, as long as it doesn't turn anything bigger, obviously. And of course, if we do move up, let's say over the next couple of days, let's say it's tomorrow, whatever, come back up into this gap does put you back to the 50 fib. I've showed you these other day. They usually work out pretty well, which would, of course, what we're looking for, see if it's going to be a lower high or not. Okay, so if this does move up, we're looking to see if a lower high is going to be set, because that'll give us our high, our low, and then a lower high, right? So that's basically what we're looking to see if this forms, market structure. It doesn't have to. Okay, we've seen the dips get bought up. We've seen retail just surge into the market as usual. We'll see if that's going to be the case. The big question is when you look over at the futures, which are red as I'm recording this, you can see where to stop. It gave us equal lows of the day. And now if we come back up, there's plenty of liquidity to be had, right? So the question really is it going to take these out overnight and then move up? Or are we just going to bounce from here, come back up, get some liquidity, set a lower high, and then start moving down some more? That's really what I want to be looking for as far as market structure and everything like that. Actually, you can see all the liquidity below, which would be beautiful to get taken out because, again, that's a weekly fair value gap. And I just like to plan. So if the thing does start to move down, then I know, okay, maybe this is where it's heading. At least that's my first target to see. But again, this doesn't mean the bull run going up and over. Doesn't mean any of that stuff. Okay, so you got to keep that in mind. That target down there, I'm not sitting there for a day. I mean, this week alone would be something I'd be looking for. Maybe the next 2 weeks, depending on how all these earnings are received in the market. You'll have your winners, you'll have your losers, but these stocks don't have huge amount of weights in the market. So just keep that in mind. And so that's what I'm looking for tonight, to see if we take out these lows right here. And if we don't and move back up, they're definitely, for the, I guess, the rest of this week for me, definitely going to be a target to look at. And so just see if we set a low or a high. That's what you're looking for. And then come down and break those equal lows right there. RSP setting the same thing up. Bounced perfectly right there. Set these relative equal lows. That right there was the previous all-time high. Turn support into resistance. You see the gaps above. Remember, this one never did set a new all-time high. I just showed you kind of the funny way, like, wow, wouldn't this be interesting on a weekly if this was a double top or something? And so now you got these gaps above, all these imbalances. So that's what we got to find out. The market loves to trap people. They think it's just going straight down. If there's an event that is, yes, that can happen. But usually if there's not an event or anything, it's got to come back here, try to grab people, maybe trap people back in there to the upside, and then try to move down and take these equal lows out. That's what I don't like to see happen, just because I like to buy stocks at lower prices. Again, some people like to buy at the highs. I personally do not. I'd rather buy them at a discount. But again, everybody has their own opinion on that. So let's see if this is going to move up and take that before heading down. And so, because we leave those equal lows on futures and this S&P and this one, like, that's going to be disturbing because it's just not efficient, okay? And if we zoom up, you can see if I put the fibs on here where the 0.5 fib would be, right in that imbalance. You can see where the discount would be if we came back up. Okay, if you watched my video the other day, you know what I'm talking about. Again, we were consolidating IWM. Like I said, I don't know if it's moving up or down, but it's definitely going to be a nice move. And so far, it's to the downside. So we can move that out right there. Now we got this nice gap above. It did hold to 1496, or basically closed above. I should say it didn't hold, but it closed above. Took out all this liquidity right here. Got these imbalances out the way. And so now we get to see if it's going to hold this level. Keep in mind, we got the gap above. All these are looking the same, right? The other thing about this one, though, is if we pull up the 50 and the 200, you see the IWM is like the only one that actually closed below both of them. And so now it has this 200 and it's 50 above. And so now that is resistance. So now we get to see if we're going to be rejecting off that 200, because this is the one, if there's, market softness, like I said, this is the one that's going to really drop. And this earnings this week, you got a lot of small caps reporting, as you see. So if they start moving down, then guess what? IWM is coming down with it. And so that's what we get to find out, because a lot of those companies reporting are not profitable. Some of them have like hardly any revenue. And so it's going to be interesting to see how the market actually accepts those earnings. I can't wait to hear it. This is one of my favorite weeks. All right. NVDA, now it's below the 5-day. You don't see the 20. It didn't break the 20 moving average. Like a lot of stocks have. It did not break the 20 moving average right there. You see it came down, just kind of bounced in that area. So we're going to see, are we going to get a bounce off this, or is it going to break down, start heading towards that blue line right there? And so that's what we got to find out. Again, that would be a discount bounce for this one. AMD obviously is going to really, I think, dictate this whole thing. SMCI, I mean the other two, but really AMD. If AMD completely tanks, I think it's going to drag NVIDIA down with it. But again, who can complain? I mean, the run-up has been unbelievable. Okay, I showed you those channels. It's been just crazy. Okay, so watch 169.56. If we decide to come down, we'll have to go through tomorrow, see where we end up, and then roll into AMD earnings. If we pull AMD up here, you can see this one's, to me, been on an even better run. But, you know, there this one is coming down into that imbalance, held that level right there we had marked out. So it's pretty much basically mitigated that right there. Below the 5-day, it's nowhere even near its 20-day. And that's down to 158. So that's got to be even a bigger drop. So it's pulled up even farther ahead than NVIDIA as far as its moving averages and stuff. The 50 is way down there. There's a gap right down there below. And so, again, there's more liquidity to be had on this one. This was a crazy move up, many days in a row of green and stuff. Huge green weekly candle on this one. And so, you know, let's see what happens if we get the low set, where that's going to set at. And if we start to move up, do we get the lower high and start breaking out even more? Or do these continue to, and more importantly, what I'd like to see on them, yeah, I'd love for them to come down to buy them even better, but more importantly, when do they start consolidating, right? Really consolidating for like a week or two. And that has to happen at some point in time. That's how the markets work. That's how these stocks move in regular times. Right now, we've been euphoric as can be. Now we're coming into a time period which is not euphoric, okay? So watch that 164.50. See if we hold that. If not, 162.25 will be your next one right there. That's what I look for as far as that level is concerned. And obviously, they report Tuesday after bells, I've showed you. So a lot of that's going to dictate. We'll see where they're going to set this thing up going into earnings. If we just happen to have like an Amazon or Apple response to earnings, watch 145 to 150 in that area, because there's just a lot of confluence. Okay, it's like previous all-time highs, huge weekly fair value gap. I believe the 50 moving average is somewhere close to that right there. As well as it will be obviously in the discount stuff. So watch that one. And speaking of earnings, I mean, SMCI is going to be reporting the same day. What we talked about, big move up on it last week, broke the 5-day, still has not retested that 20 yet. Still got a little room down below. Got a nice gap right there, the imbalance below. And so let's see how they're going to set this one up coming in. Again, report same night. This one hadn't had the kind of run AMD has not had the kind of run that NVIDIA has had, because all the accounting errors and everything else. But it's been a grind up. Okay, that's what it's been. It's been a grind up for this one. So just watch that one to see if it's going to come down and hold around between $54, or is it going to break down below and finally get a test of that 20-day moving average right there. As you can see, if we zoom in, if we do get a bounce tomorrow, then watch between like 58 and 60 bucks. See if that holds. If not, coming down to 54.50 right there, as you can see. And then we go to Apple. I mean, clearly I just got to cover this because the earnings, they need to escort the CEO out, because obviously they're losing, and the market's telling you that. They're losing the AI race. Obviously, he didn't say the word AI enough on the call when he was asked about it, and so they got absolutely dismantled in a way. And so now we're back here, 202 area, see if it holds. We'll see if the one, and really what we're looking for is that 196 to 201 area to see if it comes to the area and bounces again, right? That's where it held for quite a while right there. And you can see there's plenty of liquidity above to be had, and it mitigated. If you look at all that liquidity to the left, mitigated all of it, right? Went up, mitigated it to the top, mitigated to the downside. So now it's going to be interesting to see, did this thing come down, hold that area, and start consolidating, right? Because I don't know any catalyst for it at this point in time. And clearly, the market's not looking at this as like a winner like Microsoft or Meta, okay? Amazon, big move down right there on its earnings, held or closed above the 214.75 area. So that's an important area to be holding. That's where it is. But you got a big gap right here. Okay, so now it is below the 5, below the 20. And so big gap above on this one. And the reason why it was important to hold that area, you can see clearly where that was resistance multiple times support. So that was a big thing, actually closing above that one right there, or above that level, excuse me. So, you know, and you see there's the 50 moving average right here. So now it's below the 50. The 200's at 210. And so if it breaks at 214.75, look for 210 to hold for 200 test. But clearly it has to get above the 50. And look, I know you're going to see this out there, but no, Jeff Bezos has not picked the top of Amazon, okay? He's sold like I think it's $6 billion in the last month. Remember how much he has, but also look at last time. When he sold like crazy, it did a small dip down and then just kept going after that because remember, November, of course, is the most bullish month. Now we're going into one that's not so bullish. And so again, but either way, he's not a top picker. He's just selling because he can, and he has a boatload, as you can see. And remember, he spent $50 million on a wedding. I'm just kidding. I mean, he rented out Venice. But yeah, he's not the guy who picks the top or anything, okay? Now, hood right here is going to be interesting because clearly you're seeing that market structure with, okay, high, low, lower, high, lower, low right here. We broke the 5, broke the 20 right now. Let's see if we get a retest of both those and gets back above, or does it come down some more into around that 83 to 85 range right there, which would be, you know, nice to see because obviously this one's been on a crazy, crazy run. See where the 50's at? It is way down there, like 66. I mean, this thing got so far stretched, but it finally broke. Like I said, when you break these parallel channels, you know, you can see a decent move down. So again, it's going up. I think the high was 113. The other day it was sitting, what I done like 95, closed at 99. So we're gonna get to see if we continue to see weakness in this one right now. I'll get rid of that parallel channel next time you see this chart. And of course, when it comes to data, guess what? It's a very light week. Okay, you got factory orders on Monday, which is really nothing. And you go over to Tuesday, final services PMI, ISM services PMI, a lot of Fed speakers, Wednesday, crude oil inventory, 10-year bond auction, Thursday, unemployment claims, and then preliminary non-farm productivity, and then the 30-year bond auction. And so nothing much to speak of next week. So buckle up for a fun one on earnings. We'll see how that goes. Let me know if any of your companies or stocks you own are reporting and what you think is going to happen. Is it going to be a Microsoft and Meta reaction or an Apple and Amazon reaction? Anyway, please hit that like, subscribe button on the way out. Think about signing up for the membership. Less than McDonald's combo at $7.99. Just hit the first link in the bottom of the description. And I'll see you guys tomorrow.